For your information, I used to do corporate financial planning and analysis at a company level, short form FP&A, which means managing the revenue and the budget of a company within a 1 to 3 years time frame. And most people would have thought that I learned these skills from work and apply it to my personal finance life. But it's actually the reverse, because I have been doing all this kind of personal budgets ever since out of university. And those skills that I have learned towards my personal finance and budgeting hones my skills to become an FP&A analyst. So today I will share how you can take charge of your personal finance at a personal lifestyle level so that you can plan for your own budget, and maybe in your upcoming years, what are your forecasts in income, CPF, and even your housing plans. Now, the basics of financial planning in accounting sense, I think you need to really distinguish what is income, what is expense. That is the most basic level. But the level above that is what are your assets, what are your liabilities, and what are your equity. But in personal level, equity means your net worth, which is your assets minus your liability. So one level above that will be your cash flows. What are your multiple sources of income that is generating you cash? So before I go into the financial planning details, here is a message from the sponsor. Moomoo Singapore sign-up promotion is finally back, because now they are back with 3 deposit tiers. For the first tier, you have to deposit $100 and you can get $2 cashback for a total of 10 days. So that is a total of $20 cashback. For the second tier, you have to deposit $2,000 with 2 buy trades, so you can get 1 Coca-Cola stock worth around 80 Singapore dollars. And for the final tier, you have to deposit 10,000 Singapore dollars and make 7 buy trades, and that would give you $108 of cash coupon. So you see, your rewards will differ depending on how much amount you deposited over the period, and that is a total of $208 if you fulfill all the conditions and do not withdraw your cash deposits for the stated period for each tier. Now, Moomoo SG is also one of the most competitive trading platforms out there, offering you US, Hong Kong, and Singapore stocks, options, dividend stocks, funds like Moomoo Cash Plus, ETFs, and even their latest feature, which is foreign exchange trading, if you are that experienced enough. So sign up with my link down below or scan the QR code right here to get your Moomoo SG account today. So this financial planning will actually be a video series, and for today's video, I will focus on the first few years, especially when you have just graduated from university, and what are you going to do from your first paycheck. And all this will lead up to your first property purchase, which I'm going to put in a huge assumption that you're going for BTO as a couple. So starting from year 1 of full-time work, for males, you're probably at age 25. For females, you're probably at age 23 because of the NS gap, right? So I'm going to use a very conservative monthly salary expectation of $3,500. Now, this monthly salary is highly dependent on what is your profession, what is your industry, and what is your sector. There are certainly sectors that are higher paid, and there are certain sectors that are lower paid. So I'm using 3.5k. It's already considered very conservative. Now, to share a bit on my starting pay, I was only drawing 3.2k 8 years ago, So for the annual salary, I will use a 14.3 months package, which means a 12 months ordinary wages and 2.3 months additional wages, which can be in your variable bonus, your performance bonus, or your additional wage supplement. So it's a total 14.3 months, which means that 14 times 3.5k, you will get $50,000 of annual salary. So that will be your first year annual salary. And if we break down the CPF, where the 20% is from your own contribution and 17% is from your employer contribution, a total of 37%. 23% will go to the ordinary account, 6% goes to the special account, and 8% goes to the MediSave account. And we will have the following CPF balances at the end of the first year, where your OA is 11.5k, your SA is 3k, and your MA is 4k. So this is just very simple math calculation behind this, applying formulas on the spreadsheet, which I already displayed down here. So for year 2 and year 3, it will be very systematic as well. I'm going to apply a 4% annual increment. Okay, that's just like normal to keep up with inflation. Of course, we know that inflation is now off the roof, but 4% will be quite a conservative and general annual increment that you can expect for your employer to increase annually. And you can see that I have also applied the CPF annual interest rate, 2.5% in OA, 4% in SA, and 4% in MA. All these are simple interest because I want to keep everything simple. Okay, I'm not going to factor in the compound interest because you know that your CPF interest actually do compound monthly, but it's credited annually. Okay, so I'm going to remove all these complications. I'm just going to use the simple interest given by the CPF. So by year 2, your annual salary is $52,000, and by year 3, your annual salary will be increased to $54,000. All these are rounded numbers to the nearest thousand to keep it simple. And by the end of year 3, if you look at your CPF balances, your OA will be at $37,000, your SA at $10,000, and your MA at $12,000. All these have factored simple interest into it. Then maybe this is the time where you start to look at BTO with your partner. For reference, BTO means built to order. These are public housing flats which are sold at subsidized rates to Singaporean couples. So coming to this BTO purchase, let's just assume that you and your partner are okay with staying in non-mature estate. And staying in this non-mature estate, you all can go for a 4-room flat in a non-mature estate, which will give you a comfortable budget of around $400,000. Let's put it this way, right? $400,000 4-room flat in a non-mature estate. That's a comfortable budget. And during this time, at the end of year 3, as a male, you're probably at age 28, and as a female, you are at age 26. So both of you are below the age of 30, which means that you are eligible for the staggered down payment scheme, which means that you only need to pay 5% down payment on your first appointment with HDB. And 5% of that 400k will mean that it's a $20,000 of down payment. And let's not forget that there will be enhanced housing grants because both of you are probably earning a combined income of between $8,000 to $8,500. Okay, looking at this spreadsheet over here, so you are in the 4k monthly income range, which means you are eligible to take $10,000 worth of EHG, the enhanced housing grants, $10,000. So you see, your down payment is $20,000 for the first 5%. 10,000 of it is paid via your EHG. So your $10,000 remaining will be paid between the two of you. Okay, split evenly, $5,000 each, which means $5,000 deducted from your CPF OA. So now, after using your OA for down payment of your 5% BTO flat, you are left with around $31,000 in your OA. Now at this junction, you can choose 2 decisions. Number 1, you let your CPF OA continue to accumulate at 2.5% interest year over year. And number 2, you transfer all your CPF OA to the special account to earn that incremental 1.5% because SA gives you 4% annual interest. Now, I cannot decide for you how much you want to transfer. Some of you can transfer partially, right? Maybe keep some safety buffer just in case you lose your job. But the fact is, you're still very far away from your BTO completion date. Right now, we are looking at around 5 to 6 years to completion. So let's just give a very conservative estimate of 5 years to completion for your BTO. 5 years of work, full-time employment, you can build up a lot of CPF OA already. So you have a lot of time to build this OA. So if I were in your shoes, I would just transfer everything from OA to SA for the initial years to build up the SA portion first. So after this OA to SA transfer, your OA will be less than 1k, your SA will be 41k, and then your MA will be 12k. Now also don't forget the CPF magic number of $60,000 because previously you had 30 over k in your OA, but all those numbers above the 20k do not earn you the additional 1% from that CPF magic number. So by transferring OA to SA, now you unlock your first 20k can get that 1%. Your remaining funds in your SA can get the additional 1% as well. So let's come to year 4 now. By this time, you're no longer considered a junior or an entry level. You're probably more like a senior executive, right? And that's when you will receive your first promotion in your first company because you're now considered a senior to those people who just joined the company. You can help to coach them, to guide them, and that's when you will experience your first pay raise. So let's assume that by the end of year 4, you will be promoted and your annual increment will be 12%, which means your annual salary is now $60,000 per annum. Then for your CPF, what I will do is still transfer my OA to SA because it is still very far away. Maybe it's like 4 years ahead. So I will transfer majority of my OA, which is $14,000, to the special account, which makes my special account at $60,000, and that can get the full CPF additional 1% interest. And you will come to this magic point because this is when you start to seriously consider whether you should start topping up your CPF. Because let's take a very simple calculation. Your $60,000 annual salary, you take away 20% CPF, which is your own contribution, that is $12,000, right? And you will come to 48k of chargeable income. And then from this 48k of chargeable income, if you actually did a CPF cash top up to your VCMA, Voluntary Contribution Medisave account, by $8,000, you are eligible for $8,000 of tax relief. So it will reduce your income tax bracket from that 7% level to the 3.5% income tax level, which is at $40,000 chargeable income. To me, that is the most optimized way if you want to think of when you want to start topping up your CPF. So now, after you've topped up the VCMA, your MA will become 25K. So you see, this is just very basic level of financial planning, getting a monthly income of 3.5K in your first year of work, and then getting promoted on your 4th year, and then at your 3rd year, you decided to buy a BTO with your partner. All these are just very general scenarios, right? Anyway, big disclaimer, all the numbers shown today are really very subjective, and I'm using it as a perfect scenario. So if you want to have like a more personalized scenario, maybe you can ask in our Telegram group, because there will be a lot of experts on personal finance, CPF, credit cards to help you out on your personal finance journey. So join us at Honey Money SG Telegram. But of course, I know that this scenario is not suited for everyone, because some of you may have higher pay, some of you may have lower pay, some of you have side hustles, some of you don't decide to get BTO, some of you didn't get promoted, some of you job hop to an even higher pay. So there are many different scenarios that could play out. So you have to adjust the numbers by yourself if you want to do your own financial planning. So anyway, if you want to have this spreadsheet, it's for sale on my coffee shop. You can just buy it at this price. But if you don't buy also, never mind. You just make your own spreadsheet. It's okay one. Just make your own formulas, okay? So if you want to learn what is the best time for you to top up CPF, then you can consider my earlier CPF video, because I will show you when are the 3 scenarios for you to start topping up your CPF right here.